Hey guys, it's December 13th and wow, the market is green except for Tesla. And I think there's a couple of reasons for that. But as our technical traders extraordinaire have mentioned, which you should definitely keen in on our website, gurula.app, it has hit a technical spot. So we could see finally some benefits going forward. But I am going to go through CPI today, and then I'm going to go through Carvana, which is important for I think the auto space in general, but also if you like shows like Dynasty on Netflix, or, I'm wearing my 80s outfit today from the 80s, that show Dynasty, you're going to love Carvana because this story is full of all the intrigue that drama has. So let's go through CPI, which had a lot of really important data points out as it relates to inflation. And then let's go through the Carvana saga. It's going to be so fascinating. But first, we always say past performance is not indicative of future returns. And we always just set up what does it look like today in the markets. And I'd hate to. Sometimes Zoom drives me crazy. Give me 1 second. I'm going to set this up really quick. When we look at the indices today, they are mostly in the green, but then they gave a little bit back up. And just realize as well that we still do have the Fed Reserve announcement on the rates tomorrow. We do have a very mixed set of feelings in the street, although some are now saying that because CPI was a little bit soft, that we should be getting a slightly better environment. Now, CPI came out bright and early this morning, and you could see the indices trading up. Then they traded back in a little bit, and now they're back up on the day. We'll see if that can sustain. Crude oil trading up 3% and change, and that's despite the fact that we did see a weak energy number on this CPI. And also, here's what we saw on FinViz. You can see that mostly big cap tech is all rallying today. Oil is finally rallying today and catching a bid. And then Tesla, boy, people love to clobber Tesla for whatever reason. But, let's get into this CPI data, because I do think that this month CPI data, which covers the month of November, mostly through Thanksgiving, but you've got some real strange buying during Thanksgiving. It will not cover the breadth of what's going on in the holidays. So November and October are very weird months because of the way that people purchase things. Now, if we look at it, I try to grid it out because I wish that they would just do something else with these numbers, but it's really, really hard to see. And in fairness, it's so much data. The raw data feed comes out. There's not really great ways to show this. But if you look at this data, you can see that food still remains a really big problem for inflation. And we have talked about that. Food up 10% on the year. You are still seeing energy up a lot, but really starting to get some alleviation from that. And that's a big deal because in October, the number was up. Okay, this is kind of important. Gas, as you can see, that's going to hit people a certain way. That is down quite a lot. And then this one, which is really important, is our electric bills, our electric and gas bills, and those are down a bit. But we still are seeing fuel oil, which is folks that have to buy like flat out fuel oil for some heater or something else. That was up quite a lot. So this is a really intriguing mix because it tells you that something is affecting the gas price. It's not really affecting the oil price quite the same way. And I told you people are gaming this. And if this is kind of like, this would be in the category of, yeah, people are gaming it, but it's not 100% sure. We will know next month if it's 100% sure, because we'll start to see December's info. December, definitely colder than November. And then by January and February, either people were gaming it or we just got some weirdness going on. A couple other places I want to show you, but I'll dig deeper into it. The new and used car portions, new cars continue to be flat, but generally speaking, have risen in price by 7.2%. And that's despite the fact that we're finally getting semis coming through. And we have talked about, and we will show again, that just because pricing is getting through doesn't mean that inventories are improving. I'm going to demonstrate that very clearly. And then used cars and trucks, those prices have been going down. And I think that's a very particular dynamic that will make really good sense by the time I'm done with this Carvana story. Hopefully, knock on wood, I'll do a good enough job of presenting and explaining it. The other thing I want to mention to you is shelter has gone up a lot. Now, what I really want to talk about is that both the cars business and the shelter business is highly interest rate sensitive, and it is doing exactly what the Fed wanted to do in some ways, but nonetheless, it's created inflation and weird blips in other ways. And my stepfather was just talking to me about this inflation. He was like, what is the Fed doing? La, la, la. And I said, look, there's only so much Mr. Powell can do. It's really up to Congress and some of the initiatives that were set forth 2 years ago to try to help out from here, and also immigration. He was like, all right, we're not going to talk about immigration because we are here in the South. So we kind of like avoid certain topics for the peace of things. But that's really what it is. The unfortunate ability of pushing down certain things like the labor pool in the market to try to get prices down is starting to show up in other spots. And so it's almost like pick your lumps. And that's why I always say he's got to navigate this whole situation like that scene from Star Wars and the Death Star. Okay. Now I want to talk to you about regional differences because they're really starting to amplify quite a lot. This is the column that shows different parts of the United States and what kind of inflation they'll be experiencing. Now the South, where I am, has experienced it the worst, and that's all red states. So you can imagine they feel a certain way about it. California has also experienced it to the extreme. This month, California got alleviation. The Northeast, which had been one of the less, let's call it still very affected, 6% is high for the United States, but less affected, they actually got an uptick. But both the Midwest, which has been in a pretty good spot, that's where food production is anyway, so it totally makes sense. But the Midwest and the West got quite a bit of alleviation this month. Now, other things in CPI, I just want to show you. Within food, which is up 50 basis points, 0.5%. That's a big number, by the way. You had a really different picture between meat and grain. And we have talked about this over and over again for pretty much as soon as it became obvious in August of this year. And that is that people are bringing animals to slaughter. That is trying in whatever weird way to take pressure off of grain. And it may or may not do anything for grain because we have such a massive shortage. Nonetheless, you can see it clear as day in CPI. So your grain prices, your vegetables, as people decide to plant grain instead of veggies, all that stuff, those numbers look horrible. And in fairness, it's not just this transition of what should I plant given what makes sense as a farmer. It's also, we've had droughts, we've had not the best weather for you to be planting stuff in North America. So we're really going to depend on South America to do its thing. Down here though, you know, some animals can be grown very quickly and some cannot. So we'll have to see what the long-term effects of this are. But you got meat, beef in particular, those prices are coming down. Pork is a little bit dependent on the item, whether or not it's been up or down. And then poultry is down right now. There's a little bit of a different dynamic going on in poultry, which I won't speak too aggressively to, but that's what's going on in food inflation as we try to make it through here. Now, I want to talk to the auto dynamic because it's a really strange one. New car sales, that is still holding its pricing like a rock star. And thus far, people have not required that prices be lower in order to get a new car. Okay. Used cars have come down 2.9% on year over year. So we take November, we compare it to the end of October, what's it look like? And then we take November and compare it to last year, November, what's it look like? So this is the full year is down 2.9%, 3.3%, different ways of looking at it. This is how the data nerds do it. So used car prices finally for the first month show a year over year decline. Now we've had a number of quarters, July, August, and September, but really September, CarMax already told us, because CarMax reports in September, that the prices dropped off precipitously. That was then echoed in Carvana's commentary. I'm going to show you that here in just a second. But I believe the reason that's happening is not long-term sustainable, and it's not indicative of us necessarily having more inventory. And that puts us in a really weird spot. But I am going to show you very clearly why I feel that way. This, however, is long-term not great, because we've got motor vehicle maintenance repair. So if you have any damage to your car, and this is really important for you to understand, is that if you have damage to your car, the cost of fixing it has gone up dramatically. And then the other part of it is vehicle insurance has also gone up dramatically. And realize that there's two things going on there. There's the fact that they're not fixing your old clunker anymore and giving you anything meaningful on it. And you might not think it's a clunker, but sadly, 7 years is all the depreciation they'll give you. So as a result, you're getting some of that rolling off in a different mix of cars, period, for which they can actually charge you insurance on. Now, I know people are going to be like, you're so wrong. It's the brand of car and this and the safety of that car, la, la, la. That may be true. But if your car used to be worth $7,000 and now your car is worth, because you bought a new one, $60,000, they're going to charge you more for insurance. I'm just saying it like it is. So some of that is also feeding into this number, and we're going to talk about why. Now, let's talk about Carvana and why, if you like these television shows, you are going to love the story of Carvana. I mean, I actually recorded a show on Carvana on Friday of last week, but then after I started to really read the Reddit boards and all the passion associated with it, dug even deeper down, and I realized I was literally watching an episode of Dynasty. Carvana is that exciting of a story. Now let's actually get into what it is that has started off the powder keg. This is definitely a part of meme week, because Carvana has for sure been within the meme grouping of stocks that we saw last year even. But we had this article that was on Yahoo Finance, the Jeffrey analyst, saying Carvana is going to run out of money without an additional infusion by first quarter of next year. This was the Jeffries analyst. I understand that the analyst from Bank of America said about the same thing. He said that he'd give them through the first or second quarter. And so I'm like, wow, that's an aggressive statement, because usually if an analyst thinks you're running out of money, they're going to say it any number of ways. They're not going to cite the quarter, but they're going to say it a different way because they want the banking business, for lack of a better way to describe it. So I was like, I got to see what's going on with these financials. And I was expecting to see complete junkola. And what I saw was something that wasn't perfect, but Carvana is a young company relative to all things. It's about 10 years old. It hasn't been public for that long. Part of, obviously, you're usually private than public. Now, did it come public a lot faster than normal? Yes, it did. But it typically then would be treated a certain way. But this kind of language doesn't suggest that it's going to get any kind of anything. Additionally, when I was at Berkshire Hathaway, there was a lot of intensity surrounding this. I thought it was because the valuation had gotten out of hand as a meme stock. But in fact, no, there's a little bit more to it. So let's talk about it a little bit before we get into why this story sounds a whole lot like Dynasty. It's a roll-up strategy is what it is. And it is betting on the macro front, a particular set of things before we go into the micro. In the macro, the auto industry is $1 trillion business. You should know that whether you're doing this or Tesla, but the used car market's only 840 billion. And I'll show you why it's not necessarily growing, let's call it that, at this particular point in time. It's only about 2% growth from 2017 to 2022. But this right here is why it's a roll-up strategy. The industry is very fragmented. There are about 43,000 used car dealerships. And then the top 100 dealerships are only 10% of the total market. In contrast, if you're doing this type of analysis on other industries, you might see the top 10 players be the huge lion's share of the market, and then just this little tiny tail of nothing as far as new entrants into the market. If you look at the autos industry, you'll see that clear as day. For the new market, the used market, however, looks like this, with a bunch of baby little dealerships, and then a few big ones, but not big relative to total addressable market. And then, so their argument has always been that this was ripe for disruption. The key thing for a roll-up strategy, and that's whether it's here or whether you look at the video I made the other day on solo brands or other videos that I've made, is that you got to have access to funding. Your balance sheet has to be there to support you. And the intriguing thing about this company is they are not funded by the private equity market. This is how they're funded. This is so interesting. I swear, the biggest, so if you look on the board of Carvana, you're going to get a bunch of really awesome people on it, but they're not necessarily private equity folks. And you usually see, like, for example, because some of the companies I've done in the past have 2-3 board members that are in private equity. They have none that are in private equity. What they do have is Mr. Ernest Garcia II as one of the largest and biggest shareholders. Now, who is Ernest Garcia II? Ernest Garcia II is Ernest Garcia III's dad. Okay. So daddy is on the Forbes 500 list, Forbes 100, I think, 172. Anyways, he's on the Forbes list. He's got 2.8 billion, they estimate, in net worth. And so right now, if you think he's running out of money, you have to believe either the private equity market is not interested in what Carvana is saying, or his daddy ain't going to give him the money. So now let's talk about how much money is it, because that part becomes very interesting. But I'm going to leave that towards the end because I want to show you a little bit about the used car market that not everybody seems to be talking about when they talk about Carvana and how stupid and all this other stuff is. I think that's really, really unfair. So Carvana, if y'all don't know it, it is only in the used car market. They do not at this time really do much with new cars. Okay. And also there are those vending machines that you've got. So you do, in theory, as the company grows out, have lower costs of maintenance relative to a dealership, et cetera. And also they claim they have this algorithm that buys used cars really well. Some people claim that the algorithm is not as good as a human being. Let's not try to get too into it, but if you're doing your due diligence, of course, you should do that math and do that analysis. What I do want to talk to you about is this, though, and this is still true. The average age of light vehicles in the United States has gone up, not down. Here's where it's been. It's been a problem for a while. Remember that a car is fully depreciated at 7 years of age, and we are now at 13 years for light cars, 12.2 on average, and then light trucks is at 11.6 years. So this average car age has 100% moved in one direction for the last since 2017. All right. So that's where we're at on the used market. And part of why that's happening is this comes from the Federal Reserve. St. Louis Bank does a great data work. These are domestic auto inventories. And you can see that number has gone straight down since 1996 with a little tiny baby period here from 2012 to 2017, and then straight down like a rocket ship since then. And we've talked about the fact that during COVID, there was no auto production. I mean, we literally had months where there's nothing at all coming off the line. And as you know, we show every single quarter what the railroads say they're actually delivering through to the United States. And we had, for the first quarter, auto deliveries be up significantly, but really it's been pretty bad throughout this period of time. So that's what's up in auto inventory. But auto inventory is not the same as auto pricing. And I claim that because of this rising interest rate situation, you did have a lot of used car lots and used car folks liquidating a bit out of concern that they were going to have some issues as interest rates increased and subsequently would create pressure on the used car market. So I think some of that is the dynamic we're seeing. We're definitely seeing lower car sales as of September from CarMax, who reported at that time. And then subsequently, we do see it in Carvana's numbers. Now let's go through Carvana's numbers right this minute. And you can see, yeah, revenue down quarter over quarter. It's not crazy, but it is definitely down. And this is off of lower units. Okay. So we did have less cars sold at a higher price. You do see gross profits still positive, but significantly lower. But the difference in gross margin is just a tick. All right. We're like at 15.2 and 14.7 here. So it's just the smallest change in gross margin. A lot of that is coming from the wholesale market. And the wholesale market is you selling a bunch of cars to either a company that needs a bunch of cars, or you selling a bunch of cars to another dealership or whatever it might be. This 100% is liquidating out your inventory. And part of the reason they need to liquidate out their inventory is because they do have some short-term debt needs. They got some financing. They got to pay their bills. That's really what's happening. And because this business is in fact a roll-up, and because it's early stage, this whole interest rate situation does put significant pressure on the business model because, but at the same time, if they can get through this financing, it's a big deal because what they do is they buy up inventory that other people can't do much with. And so they need capital right this minute to take advantage of what's going on in the interest rate world if it's temporary. Okay. As a result, though, too, one way or the other, they ought to go ahead and liquidate what they have and go to cash so that they can have more dry powder to potentially get those cars from distressed auto dealers at a great price. But the real question is, can they get the money or not? And that's the thing that's going to make the next few months of Carvana extremely exciting. All right, let me share my screen again. So this is where we're at on gross profit on the income statement. Here's where we're at on the balance sheet. You can see that one of the things you look at as to whether or not as to what the timing might be of a real problem is you look at current assets, you subtract current liabilities, and you get working capital. And that tells you they're definitely working capital positive to the tune of 2.5 billion. And a lot of people got all kinds of feelings about that when I entered Reddit and tried to talk about it. It's like they didn't want to talk about it. They're like, they're EBITDA negative, and therefore you're wrong, I'm right. And I'm like, well, wait a second now. You're saying they got this much time before they blow up. I'm just little baby analyst over here by myself trying to do the work, and I'm seeing working capital positive, trying to recreate the same time frame that you're talking about. Why y'all so mad at me? I don't know what it is, but there's a lot of feelings in this. Anyways, vehicle inventories, I told you about. The market cap right this minute is around $500 million. Again, you want to look at the sales. So you're paying $500 million for something. This is just on the quarters. They do about $6-7 billion worth of sales. Okay. But you got to actually put the long-term debt back in. So you have an enterprise value of 7 billion. So you're trading 1 times enterprise value to sales right now. Company's not profitable, fair enough, but it's super early stage. Okay. It's like, CarMax in contrast, which is also as innovative, is 30 years old. They're 10 years old. Trailing 12 months revenue, 14 billion. Okay. So from my perspective, from a pure valuation perspective, which unfortunately I weigh personally a lot higher, I'm a wait and see kind of gal on this. But from do I think it's going bankrupt in a quarter? That one's harder for me, because this isn't the worst set of financials I've ever seen. And on top of it, if I was just going to say everything that's negative EBITDA and has debt is going to zero, I would have to take a whole lot of companies out of the entirety of the US stock market, because that's nonsensical. That's what the private equity markets and the capital markets are there for. So there's that. On cash flow from operations, I do want to show you this line item, because there's a lot of chitter chatter, and I think this line item is the one to watch. And I'm just going to show it to you. So if you hear someone, you know where to go. You go to the cash flow statement. What you have to understand about any autos business, whether it's the used business or the new business, is that they basically give you financing, and that goes into revenue. And then they got to get that financing that they just sold you. They got to get the loans off the books and sold to the public markets. So they got to move off, right? And the used car markets have a slightly higher tilt of subprime auto lending. 47% of the folks approximately are prime. A little bit higher than that is subprime, okay, within autos. And so this right here on cash flow from operations tells you that most of the receivables have been moved on out, okay? It's kind of important. And I'm pretty sure that given this man's particular history and his father's history, they are probably doing this just fine. There are people that do not feel that way because, and that's a whole story in and of itself, which we may talk about later, but so far I'm seeing the loans come off the books. So this right here is very, very healthy. It also implies that they're probably doing the loans correctly. We shall see. But then the 585 is still a shortfall. They've got vehicle inventory that they bought this quarter. So, or that they sold out this quarter. So they're actually liquidating inventory to try to bring this number down from last year, where they were buying inventory like crazy. Some folks are concerned that they bought the inventory way too expensive, and that may be true, but remember, they're liquidating it. So they're probably going to get at least what they, unless like the net loss between that two is what's going on here. But he's got a $585 million shortfall. There's a few different ways, which I encourage you to look through here, that some of that is being flowing through. But right now, if we go back to the balance sheet, he's only got 316 million in unrestricted cash. So we got about a 200 million something that has to happen there. Daddy does have it though, but it's whether or not daddy's willing to give it to you, because that ain't a small number. Let's call it what it is. Cash flow from financing, payments on short-term revolving facilities. So they've been paying out their debt, and that's been fine. And then what is the debt situation? It's this, they've got the 2025 note coming up in 2 years, but most of their debt, except for this unsecured note on May 1st, is at 5 and change percent. Instead, on the longer dated notes, it's going to be closer to 10%. All of that, if it happens, is going to flow through to the way that they do financing and make them potentially less competitive. But quite frankly, I think the whole market is going to experience something like this in used. And what that does to the dynamic of used car prices versus financing, given that the used new market is also experiencing intense inflation, is very hard to say. So there's a lot of stuff going on, such that if I was a new investor coming into Carvana, I would pause. But if I'm already owning this company What should I do? If you don't want to be around to see whether he gets his financing, then go ahead and sell it, because that is a normal way to think about it. But you should obviously talk to your local person and how they feel about it. If he gets financing, I do think you get a little bit of pop. But like I said, this one's a tough one for me, because he is trading at one-time sales in a business that I can't tell precisely. It could go either way. It could be that we don't have enough used cars and the new car market isn't filling the demand. It could be the interest rates start to decline, and so you get a little bit of pressure taken off this market. Or it could be the wheels fall off of the consumer, period, and we don't get used or new cars doing very much. I don't know. I'd rather go with a company that doesn't have the financing arm. Turns out that company, the only autos company of meaningful size that doesn't have a financing arm right this minute, is Tesla. There may be some of the Chinese autos that are like that too. It's just a tough story. And with that, I will finally pause. I know that was a huge mouthful. Any questions?
Jaime, that Carvana story is very interesting. His father,
Garcia the second. Yeah.
let's call him the second. Okay. He owns Drive Time.
Yeah, he does. So this is actually, in a lot of ways, he is doing his daddy's business. Now, the thing that makes this story so interesting and like Dynasty, a real like watchable Netflix series, is that in the SNL scandal of the early 80s, or late 80s, in the SNL scandal, Lincoln National was the bank at the time. I don't know why I'm blanking a little bit. In the SNL scandal, Lincoln National was basically working with a lot of the home brokers, the mortgage brokers. And his daddy had started out, he was a young man at that time, in the brokerage business. And he ended up pleading guilty as a part of that whole SNL scandal to this activity called straw manning. What straw manning is, and quite frankly, they even did it in 2008 to some extent. It's just you didn't hear much about it because everybody's focused on Lehman Brothers. But straw manning is when you go to buy a house and you have somebody else guarantee the house. And usually that will lower your interest rate significantly. And it puts you, whoever guaranteed your house, on the hook. So typically parents will do this for children and it's normal. But what was going on in the SNL scandal was that strangers were doing it and they were getting maybe a little bit of a thank you fee, let's call it. But then the homeowner was getting a lower fee, and the SNL, the Savings and Loan Bank was then writing the thing as if you had a full guarantor with great finances that was totally willing to pay the loan. It was messing up everything. This was early days, because if you think about it, the mortgage market actually isn't that old. A market in general, starting really out of Sally, and we'll go through that in a different video. But anyways, this is called straw manning. His daddy definitely paid the penalty for it, but somehow he came out of it like a champ and ran some good businesses. He's $2 billion net worth, so he's more than made up for it. But I find it fascinating that, there's so few kids that will go into their parents' business. He's one of them. So part of me is kind of rooting for him in some ways, provided there isn't more ugliness going on. Now, he does have 4 states that are coming at him a little bit for some awkward stuff that has been happening in his business, in the used car business in those 4 states. So that has to be worked out. If he's going to do financing with his father, I'm sure that doesn't have to be worked out too aggressively. If he's going to do financing with a private equity arm, we'll probably hear a whole lot more about what's going on with those 4 states before it's all said and done. But this story really comes down to whether the man gets his financing or not.
But he has sales, right? I mean,
he has sales. He's got actual weird vending machines that do actually help sell the cars, like gigantic bulletin boards, because he puts them right next to the freeway. It's not the worst company. Yeah. Right. There's a reason.
His dad did Drive Time and he built it up to, several $1 billion. So
yeah, he's a real guy that's done a real amount of business. 100%.
But Carvana is is a spinoff of Drive Time.
It is. That's correct.
So, I mean, obviously they went public to get capital, and you're saying they need capital now to stay in business?
Yeah, right? because if the balance sheet stuff is right on a dime, and most likely that's why most people think he's just going to go to his father for it. But for whatever reason, that hasn't already transpired, and I think that's what's putting the pressure on the stock.
Well, what's hurting them? Is it sales? Is it just overhead?
It's this really weird dynamic in the used market right now, which is, it's just like with the home market. Everybody's kind of taking a pause because, especially the used market. Well, it's true in the new market as well. Like people, if the financing is more expensive, then the car is more expensive.
Oh, I see the payment, right.
Yeah.
Okay, so that's what's hard. The payments are higher, which people, okay, I have to pay more. Okay.
Yeah.
That
That's why
whole
CPI matters so much for this industry right now.
that whole SNL thing was really, that was headline news back then.
So ugly. I mean, it was straight
They-
up.
No, they were called the Keating Five. And Charles Keating, I mean, he developed the Phoenician in Phoenix. Very, very successful. Another part of the Keating Five was the late John McCain.
I did not know that.
Yeah.
That reads a little bit weaker for me. I only know the very, very basics that they taught in school versus like anything else, but these stories are exciting. I wish that the press would
It looks
actually.
to me, I don't know. It looks to me like the dad knows what he's doing. I don't care what he did to savings loan. That was 30 years ago.
It was 30 years ago. I know. I mean, let's call it what it is. The used car business is not everybody's business. You know what I mean? It's got characters, it's got players, it's got all kinds of funky going on, for lack of a better way to say
Starting
it.
with used car salesman prototype.
Yeah, exactly. I don't think there's an easy way to do that business one way or the other. So I can imagine why a lot of private equity people would just be like, I'm not going to touch this business. You know what I mean?
Do they have a service division?
I'm not sure. It doesn't show that way cleanly on the sheet, but I'm sure that there are some service divisions. I think mostly it's just, no, yeah, I didn't see anything of that nature. It's mostly just the selling of the cars that I saw spoken about. So it's just, they got to deliver the car to the little, what you call it, the vending machine. But other than that.
Yeah, I mean, I don't know. I've never seen one. I need to find one. There's got to be some around here in California.
There's got to be 100%, especially given where they're. Yeah. I mean, like I said, I think it is a hold right now. Like I wouldn't necessarily get into it. I would definitely want to see a little bit more. If you're like really, I mean, the stock is trading low. So if you're just wanting to buy one share to watch it like a hawk, because that's the kind of thing you do, I wouldn't think that was terrible. But for me, there are other, I mean, we had a whole $5 list to take a look at. That said, boy, do I want to get smarter on it, because it is number one, it's one of the most fun stories I've heard in a while. Number two,
yeah, it's
if
interesting.
he makes it work.
I don't think his dad's going to let him go to business.
Yeah. It's a tough one because you never know family dynamics. I hope that most of me thinks you, but you never know. I watched Dynasty.
Oh yeah, they're ruthless. You watched that in the 80s?
Well, they have a new one now. Netflix is showing one with the new Carrington family.
Oh yeah. I mean, and it came on right after Dallas on Friday night.
Exactly.
Dallas was the same. They just, they're always stabbing each other in the back for money.
Yeah. So, but family's family too. It's really interesting. I mean, in fairness, I think they're part of the reason why I don't think his father will let him go bankrupt on this is that I do think he's running a decent, like it's a roll-up strategy and it's in a particular stage of his business. So what he's experiencing isn't craziness. It's just the timing of it was so aggressive. I mean, rates really moved very fast by any historical period standards. That's the first thing. And the second thing is Mr. Garcia is still the largest shareholder. So Mrs. Garcia Sr.
Yes, yeah.
So there is that. The other members of the board, there is one gentleman that's on the board that does the debt financing. So it could be a function of the fact that they do and will have to in the future find even more sources of long-term liquidity. By the way, I'm going to do Upstart tomorrow, which is another lender, and you're going to see that thematic among any of the subprime lenders at this point in time. So again, like I said, that's just to be expected in testing the business model and how they're actually doing things. But yeah.
But rates have topped. So long term, these payments should go down, which would help. Nothing but this, it would not hurt them.
Yeah, if rates start to decline from here, if rates have plateaued, let's call it, because we still have tomorrow's meeting, we still have a lot of news flow associated with it. But if we start to get inflation simmering down, rates becoming more manageable, we don't have any more weird oddities going on, and this, then he'll have, I mean, that's why I'm saying you have like 1 to 2 quarters. One, he's got to get his financing, and then two, he's got to get through this little period. But my suspicion is he's going to take this whole period in general is going to take more of the used car business out. Do you know what I mean? Because if he's experiencing it, every used car dealer is experiencing this right now, that 43,000 that I was talking about at first.
Yeah, yeah. Okay.
Yeah. It's an interesting one, and it certainly is
Yeah,
fun. So I give the meme stock guys credit.
They got it as a meme stock?
I think of Carvana as a meme stock, given how aggressive it got to, but maybe
Really?
other people don't think of it as a meme. I don't know.
Yeah,
I was just looking at anything that ran up so aggressively relative to any kind of valuation.
yeah,
And
we'll
this,
keep it on the radar. That's really cool that you're watching this.
I'm going to watch it. For me, given how I invest, it's a little too much. For the day traders, they should have as much fun with it as they can. And for everybody else, depending on how knowledgeable you are about the used market and about the internal workings of things, knock yourself out. Cause I don't think it's, I mean, it's got to get this funding, but I feel like he's got a shot, you know what I mean? A better than 50% shot, given all of it. You know what I mean?
What's his competition?
Well, CarMax technically will report next week. So we will get another data point, and that will make things rocky, because my suspicion is that CarMax really needs the same dynamic to happen. They just happen to be an older company, have more access to financing relative to little tiny Carvana. So CarMax will be another data point. After that, I think you get a lot of small cap stuff that might, you know, be out of my purview to know too much.
I know CarMax has, they do have service.
Yes, CarMax does have service. It's interesting. You know, I tell you, the used car business, I've never had such an enjoy. It's really, boy, like every stone you uncover, there's another thing.
Yeah, they're right up there with the Shirneys. Okay, cool.
All right, take care, guys. See you tomorrow. Good luck in the markets.